students, welcome back to Accounting 2401, Principles of Financial Accounting. This is Dr. Mercado speaking, and in this particular lecture, we're going to begin covering Chapter 7, which deals with internal control and cash. Now, this particular lecture is going to be covering how to complete exercise 7.22. Okay, I want to remind all students of the importance of reading the chapter before you attempt any of the problems. Please make sure that you read the chapter, you review the PowerPoints, you listen to my lectures, and then you begin working on your assignments, okay? Now, this particular chapter covers a variety of items. The learning objectives for Chapter 7 includes describing the Sarbanes-Oxley Act and its impact on internal controls and financial reporting. We're going to describe and illustrate the objectives and elements of internal control. Describe and illustrate the application of internal control to cash. Describe the nature of a bank account and its use in controlling cash. Describe and illustrate the use of a bank reconciliation in controlling cash. Describe the accounting for special purpose cash funds, and describe and illustrate the reporting of cash and cash equivalents in the financial statements. Okay. Now, this particular problem that we're going to be covering deals with bank reconciliations. It is very important that we learn how to prepare a bank reconciliation. There's a lot of information being covered in the chapter, such as identifying cash short and over, your petty cash fund, bank reconciliations, special cash funds, cash equivalents. You know, there's a lot of information that is covered. Please make sure that you read. That way you understand the information being presented. Okay. It is important that we understand why internal controls are necessary to safeguard our assets. And specifically, cash is one of the major assets that we need to make sure that we safeguard, and we have good internal control processes in place to make sure that we account for it correctly. Okay, it is very important to understand that the objectives of internal control are basically to provide reasonable assurance that the assets are safeguarded and used for business purposes. They're not being stolen, that they're not being misused. Okay, make sure the business information is accurate and that the company is complying with laws and regulations. Okay, the elements of internal control are the control environment, risk assessment, control procedures, monitoring, and information and communication. Okay, so the textbook covers a lot of information. Bank accounts are very important and are instrumental in safeguarding our assets. Preparing a bank reconciliation will allow us to identify any discrepancies within either our books or the bank. Okay, and that's what our focus is going to be. We need to learn how to prepare a bank reconciliation, specifically a cash reconciliation. Everywhere you go, in every business that you work for, the cash account is reconciled. Depending on the type of business, the size of the business, this could be done daily, weekly, monthly, but it's very important that we learn the process of reconciling our cash account. Okay, so a bank reconciliation is basically an analysis of the items and amounts, creating a difference between the cash balance reporting at the bank statement and the cash balance reported in our books. So we're going to be comparing what the bank has and what we have in our end, and then figure out what is causing the differences between the two. Okay, and we're going to figure out the adjusted cash balance, which is basically what the amount of cash that we actually have to utilize in the business. Okay, so a bank reconciliation is divided into two sections. We have a bank section and a company section. Okay, so the bank section begins with the cash balance according to the bank statement and ends with the adjusted balance. The company section begins with the cash balance according to the company's records and ends with the adjusted balance. Okay, and basically the adjusted balance from the bank and company sections must be equal. So this is an example. We always start at the top with the bank section. The bottom one is the company section. We have all of the items. And then at the end of the day, when we're done reconciling, the adjusted balance for both must be the same. That is why we called it reconciling, because we need to make sure that we reconcile both the bank and the books. Both have to be the same amount. Okay. Now, this particular exercise is basically providing you with a reconciliation. Okay. So in this exercise, we are provided with a reconciliation, and we have to figure out what are the errors on the reconciliation. And then after we identify what the errors are, we need to prepare a corrected reconciliation. Okay? So it's both identifying errors and then preparing a updated and a correct reconciliation. Okay? So by the time that you have gotten to this problem, by now you should have read the chapter, because I'm not going to cover everything in depth. This is more application based. So make sure that you've read before you get to this point. Excuse me. Okay. So we're going to begin analyzing the reconciliation from the top to the bottom. Okay, let's go in a chronological order. Okay. So first we have the name of the business, Poway Company. The title is a bank reconciliation. That is correct. Now let's look at the date. Okay. It says for the month ended June the 30th, 20Y7. Something very important. When we are reconciling it, we are not doing it for a period of time. We're not doing it for the month ended. We are doing it for a point in time. Okay. So a mistake that we have here that we can identify is the date. Okay. That is incorrect. Okay. The date is incorrect. Okay. So the first error. Okay. The heading should be just June the 30th, 20Y7. Okay. That's all that it should be. The heading should just be June 30th. It's at a point in time. We are reconciling this effective June the 30th. Not for the month ended, just for June the 30th. Okay. So the heading should just read June 30th, 20Y7. Okay. That is the first error. Okay. Now we go to the next line item. It says cash balance according to the bank statement. That is correct. Now here it says add outstanding checks. Okay. Now first we need to figure out what is an outstanding check. Okay. An outstanding check is basically a check that has been issued by the company that has not cleared the bank. Okay. So I wrote a couple of checks out to pay for my utilities, my insurance, whatever the case might be. You wrote these checks, you put them in an envelope, and you send them through the mail to the different vendors, okay, the different companies that you owe money to, okay? Now, these checks have not cleared the bank. So I know at the company level that I've issued out these checks, okay? The bank is not aware of anything because the checks have not cleared the bank yet. Okay. Now here it's saying to add the checks. Okay. Now another error that we have is we don't add outstanding checks. We deduct outstanding checks. Okay. If we want our bank balance to balance my company's records, okay, when I issued out those checks on the company's records, I went ahead and I deducted, you know what? Check number 1067, I deducted $575. Check number 1106, I deducted $470. Why? Because I'm writing a check. That means I'm going to have less money when that check clears. So I deducted those checks from my company's records. My bank is still not informed, but I know that I have outstanding checks. Okay, I have 4 outstanding checks. So if those 4 checks were to clear the bank, would that increase or decrease my cash balance? If a check clears your bank, then that would decrease your balance. That means that we would need to deduct those 4 checks that are pending to clear. Okay? Okay? So the outstanding checks should be deducted instead of added. So error number 2, it says here to add. No, we're not adding. Whenever we have outstanding checks, we need to deduct those outstanding checks from the bank balance. So all of these need to be deducted. Okay. So we need to change that to a deduct. Okay. Now the next item we have is deduct deposit for June 30th not recorded by bank. Okay. So we went to the bank, we the company went to the bank and we made a deposit of $6,600. Now we made this deposit really late in the day on a Friday night. So I don't know if you're familiar. I used to be in banking. I worked for banking for over 13, 14 years. Okay. Banks have a cutoff time. Okay. If you make a transaction after the cutoff time, that means that deposit or that check is not going to clear to the following business day. If this happens on a Friday, that means during the weekends we don't process. Banks do not process during the weekends. They only process Monday through Friday. That means that deposit is not going to post till Monday. So the deposit was made Friday afternoon. That deposit is not going to be available till Monday. Okay? So that deposit, I went to the bank and I came back from the bank with my deposit slip that says I deposited $6,600 into the bank. At that point, I'm going to record an entry in my books, in the company's records, showing my deposit. Now the bank is not going to process that deposit till Monday, okay? Because we made the deposit late after the cutoff time. So that means that deposit is not going to show till Monday. So when I'm reconciling, I know that I made a deposit. I'm just pending for it to post. Therefore, I need to make an adjustment to my bank statement. Now, the issue here says that we're going to deduct the deposit, okay? When you make a deposit, do you add to your cash or do you deduct to your cash, okay? If you make a deposit, you are going to add money. So we should be adding that deposit to our records. So the error here is that we have the outstanding deposit as a deduction when it should be an addition, okay? Okay, so the deposit of June 30th should be added to the balance per bank. So that deposit, that outstanding, let me put the word the outstanding deposit. The outstanding deposit of June 30th should be added to the balance per bank, not deducted, okay? Okay, and after that, we get our adjusted balance of $12,590, okay? Now we move on to the next line item. We have cash balance according to the company's records, okay? Now it says here we're going to add proceeds of note collected by bank, face value of $6,000. Okay, that's correct. Okay. You're going to add the proceeds of a note collected by a bank, the interest. That is correct. You're going to add those because you're collecting money. So if you're collecting money, you're going to add, that's going to increase your cash account. Now here we have service charges of $15. Okay. Now when you pay for service charges, do you add money to your bank account or do you deduct money to the bank account? So I don't know about your case, but when my bank charges me a service charge, my cash drops, my cash decreases, okay? So here it says that we are adding a service charge, okay? Well, we don't add service charges, we deduct service charges. Service charges is a fee, so that means that whenever we assess that fee, our cash is going to decrease, okay? So, number 4, service charges should be deducted from the balance per company's records. Okay. So that $15 should be deducted because it's a service charge. Okay. Okay, the next item, we deduct a check returned because of insufficient funds. That is correct. If there's an NSF check, that means that we need to deduct that check from our records because that check did not post to our account. Okay. Next, we have an error in recording June 17th deposit of $7,150 as $1,750. Okay, now this one's a little bit tricky. We made a deposit of $7,150, but when I recorded it in the company's records, I recorded it for $1,750. So that means, okay, So it should have been 7150. I recorded it for 1750. That means I have a $5,400 adjustment. Now, be very careful. What should we do? Should we increase the cash balance or decrease the cash balance? Okay. It says here that it's a deposit. We should have deposited 7150. We only deposited 1750. So that means that we need to make an adjustment to increase our cash by $5,400. So the error here is that we shouldn't be deducting, we should be adding. Okay? So that error right here, okay, that should be an addition, okay, an addition of $5,400, okay. Why? Because we recorded it for less. We recorded it for we recorded that deposit for 1750 when we should have recorded the deposit for 7150. Okay. Error in recording the June 17 deposit. Of 7150 as 1750 should be added, okay, instead of deducted, okay. Okay, and then we have our total deductions. Now, something to look at, very important, when we have the adjusted balance, that number right there, okay, needs to equal this number down here, which they don't. Okay, so the adjusted balance per bank of $12,590 does not equal the adjusted balance per company's records of 9,010. Okay, so my two totals do not equal. My adjusted balance for the bank does not equal my adjusted balance from the company's records. And that is the whole purpose of reconciling, to make sure that those two numbers are the same. Okay, so these are the errors that we have located. We have 6 errors. Now that we figured out the errors, we can go ahead and make the correcting bank reconciliation. Okay, so the first one is, we know that the date should be June the 30th. Okay. Then we begin making the necessary revisions. Okay. So we're going to start off with the cash balance according to bank statement. That was $16,185. Okay. Now we said that this deposit of June 30th needed to be added. Okay, so let's look over here. Let's look at that one. That outstanding deposit should be added. So let me highlight this one, that way I know that I've taken care of it. So I'm going to add deposit in transit on June the 30th. So we have that deposit that is in transit, and we have one deposit in transit of $6,600. Because it's a deposit, we're going to add it. Okay. And then we're going to deduct our outstanding checks. The outstanding checks should be deducted. Okay, so we're going to deduct the outstanding check. Okay, outstanding check number 1067. Okay, for $575. Okay, we have outstanding check number 1106 for $470. Outstanding check number 1110 1050 outstanding check number 1113, $910. Okay. So we have 4 outstanding checks that need to be deducted from our bank statement because those checks have not cleared the bank yet. So we need to reconcile and show as if they had cleared. So we had 4 outstanding checks. So now we can get our total deductions here. Okay, we have total deductions of $3,005. Okay. So I'm going to go ahead and I'm going to show these. Okay. So at the end, we know that we're going to have our adjusted balance. Okay. Now, my adjusted balance is going to be our $16,185. I'm going to add my deposits in transit of $6,600. Okay. That gives me $22,785, and then I'm going to subtract my deductions of $3,005. That'll give me a balance of $19,780. Okay. So we've already accounted for those 3 items right there. Okay. Next, we're going to have our cash balance according to the company's records. Okay. So we're going to bring in all of the additions. We're going to add note collected by bank, including, okay, so first we had the cash balance according to the company's records. Our cash balance was $89.85. Okay. And then we're going to bring in the note collected by bank, and that's going to be including the $300 interest. So we have $6,000 of the note plus $300 of the interest. That'll give me $6,300. Okay. So that we combine them together. It's the principal plus interest. Okay. Service charges, we said, were in a deduction, so we need to deduct those. Okay. Now this one, the error in recording June 17th deposit. Okay, we have it as a deduction, and we said that that error should be added. Okay, so we need to have another addition. We have an error in recording June 17 deposit as $1,750 instead of $7,150. Okay. So we have that item. Error recording the June 17 deposit should be added. So we're going to go ahead and we're going to add that. And the amount is $5,400. So that should be it. Now we can get our total additions. So we're going to add the 2 additions. That will give me $11,700. Then we have the deductions. Okay. Okay. Now we have the check returned because of insufficient funds. That's $890. Okay. Now we also said that the service charges, we have them under add. Those service charges should be deducted. Okay. Service charges should be deducted. Okay. That item right there, number 4. Service charges should be deducted. So we have deduct. Okay. We're going to have here bank service charges of $15. Now we have our total deductions. Okay. So we have our total deductions. We have two deductions. That's going to be $905. Okay. Now we can get the adjusted balance for our company's records. Okay. So we're going to go ahead and we're going to get the 8,985. Okay. I'm going to add my additions of 11,700 and I'm going to subtract my deductions. Okay. So what did we do? We got the beginning balance plus my additions of 11,700 minus my deduction of 905. Okay. So if you can see now, my adjusted balances are correct. Both of them are 19,780. And I've reclassified all of the 6 errors that I found. I made those corrections on my reconciliation and I moved it to the appropriate columns so we can organize our information according to whether we need to add or deduct from our cash account. Okay. So this is what the completed bank reconciliation should look like. And always remember that the adjusted balance for the company record should be the same as for the bank statement. The company's records and the bank statement should have the same information. After you reconcile it and figure out what has cleared and what has not cleared the bank. Okay. So this is the completed reconciliation. Please make sure, I cannot stress it enough, to please read the chapter before you attempt your assignments. Okay, so that is basically it for this particular lecture. All they wanted us to do was to first identify the errors, which we did, and then figure out what the updated reconciliation should look like based on the 6 errors identified. Okay, and this is what we found. Okay, so that is basically it. Until next lecture, have a wonderful rest of your week. Bye-bye.